Gross operating profit per available room is a powerful KPI that goes beyond revenue to show how efficiently a hotel turns its available rooms into actual profit. You could say it is the most complex KPI we have covered so far, as it combines two key business perspectives: total revenue and operating expenses. Unlike RevPAR, which focuses only on room revenue, GOPPAR considers the hotel's overall profitability by factoring in all revenues and operating expenses. This makes it a more comprehensive measure of a property's financial performance. In this section, we will focus on gross operating profit, as the concept of rooms available has already been thoroughly introduced earlier in this course. From a revenue perspective, GOPPAR is closely linked to total or holistic revenue management, bringing profit-oriented strategies into play. By incorporating operational expenses, this KPI reveals whether a hotel's expenses are being strategically managed to maximize investment and return on investment. As we know, nothing comes for free. If a hotel spends too much on ineffective promotions or campaigns targeting low-yield segments, GOPPAR will immediately highlight these inefficiencies. Now let's dive deeper into the concept of gross operating profit, or GOP. This is a fundamental measure of a hotel's financial health, and understanding it is crucial for anyone involved in hospitality management. GOP is defined as the total revenue from all hotel operations, minus the total operating expenses, before deducting interest, taxes, depreciation, and amortization. In other words, it's the profit your hotel generates from its core business activities, before accounting for financial and non-operational costs. When we talk about total revenue for GOP, we mean all the money your hotel brings in from its main operations. This includes room revenue. This is all the income from selling guest rooms. Remember, we exclude taxes and service charges here. Food and beverage revenue. This covers everything from your restaurants, bars, banquets, and even room service. Other operated departments. Think of revenue from your spa, parking, MICE, laundry services, or business center. Minor operating departments. This might include your gift shop, telephone charges, or vending machines. Miscellaneous income. Any other income, such as rental income or commissions, also counts. But not all types of income are included. Let's clarify what's excluded from total revenue: interest income and capital gains. Operating expenses are all the costs required to run your hotel day to day. These include departmental expenses. These are costs directly tied to each revenue center, such as housekeeping wages, food and beverage staff, and supplies. Undistributed operating expenses. These are general expenses that aren't linked to a specific department, like administration, marketing, utilities, and maintenance. Management fees. If your hotel pays management fees, these are included as well. And just like with revenue, there are some expenses we don't include in GOP, namely interest, taxes, depreciation, and amortization. Let's practice together. Imagine that, for a given month, your hotel's total revenue, including rooms, food and beverage, and other departments, is $300,000. Your total operating expenses for the same period are $210,000. To calculate gross operating profit, or GOP, simply subtract your total operating expenses from your total revenue. Have you got your answer? If not, feel free to pause the video and work it out. If you're ready, let's check together. Your gross operating profit for the month is $90,000. This figure gives you a clear picture of how efficiently your hotel is converting its revenue into profit, before accounting for financial and non-operational costs. It's a key metric for understanding your property's true operating performance. Now it's time to calculate GOPPAR. Let's use the previous numbers: gross operating profit of $90,000 and total number of room available for the same period was 3,000. Take a moment to calculate on your own. Remember, you simply divide the gross operating profit by the total number of rooms available. Ready to check your answer? Here's the calculation. Your gross operating profit per available room is $30.